Hello, everyone. I'm Missy Stefik, Benefit Advisor with Forsite Benefits, and your host for today's episode of Forsite's audio series. Today, Chris Olson is with us from KerberRose. Chris is here to answer the most frequently asked tax questions of the season, which include economic recovery rebate payments, unemployment receipts, and other unique situations that have arisen from the pandemic. Chris, it's so great to have you. Would you like to introduce yourself?
Yes, I would. Well, thank you for the introduction. Again, my name's Chris Olson. I'm a senior manager in the KerberRose tax practice, and I specialize in the construction, real estate, manufacturing for businesses, as well as, I do on individual filings. I have about 10 years of experience in assisting clients with their tax consulting and compliance needs, as well as, my 12 years of experience. I continue to look forward into the ever-changing craziness of tax policy because I am part of the KerberRose tax committee and lead the team itself. And so I continually look at, you could say, internet or articles, new legislations, regulations, trying to always keep up to date on the ever-changing policy. As we'll discuss later today, or shortly, the changes in 2020 and potential what's down the road in the near future, because there will be changes. So,
Oh boy, tax changes.
yeah,
Exciting,
it's like
exciting.
every 4 years there's something new. We get somebody new in administration, or even every 2 years, because really it's Congress that writes the laws. You have somebody to write the bill, like signs the bill. It's actually who's in the lawmakers and legislation that formulates and designs these policies. So
Oh,
that's what's really fascinating. So,
yeah, that is interesting. Keeps you
so
on
like
your toes, I'm
next,
sure.
yeah, and so like what I was looking at these next 2 years is very important. But at the same time, we have midterms next year, like November 2022, and that's going to also change the landscape potentially down the road. And so it's a crazy 2 years, it's crazy last 3 years of what we're dealing with. So
Well, I can see why you need to consistently stay on top of these
yes,
laws
that's
and
right.
regulations and things like that. So you are probably a great resource for that.
I do
All
my
right.
best.
Yeah, well, we all do, right? Day by day at this point through the
Yeah, day
pandemic.
by day.
All right, Chris, the first question is, are the economic recovery rebate payments that I received taxable?
So the answer to that question is no. The economic rebate payments that everyone would have received or did receive are not taxable. Those would have been the payments that you got in spring of 2020, and then the current one that was just last month, January of 2021. So yeah, I know I had a lot of questions on if they were taxable. They are not, so don't have to pay tax on.
All right, perfect. So do I need to provide you what I received in rebate payments when I file my 2020 tax return?
Yes, that is a constant, follow-up question that the practitioners are going back to their clients if they don't give them that information, because it is important. It is, like I said earlier, it's not taxable, but the way this rebate uh, works is it's a refundable credit that you received in advance for your 2020 tax return. So yes, you got it in 2020 and the one just last month, but you need to you got to report what you received, and then this, let's say the calculation behind the scenes will recalculate what you should have received. So, the misnomer here is if I received the full credit 2020, when I file my tax return, I should have gotten less, maybe because I made too much income, because it is based on income. Well, you don't have to pay it back, but you still need to enter the amount of the two payments you received, so you're not going to get any additional credits. We've seen a lot of clients who received maybe half of the credit or half of the stimulus payment, but when they get to their 2020 tax return, they should have gotten the full credit or the full payment. So how do they get that? Well, this is the way to do it, is on your 2020 tax return. And you file the return, and then you say trues up, or you receive the excess credit as a refundable credit, because it is based on income.
So you can receive the extra and you don't have to pay back if you were overpaid.
Correct.
Cool.
Correct.
Well, that works
Because
out.
originally the credit, this payment, I say credit and payment, it's kind of interchangeably. But how they IRS calculated and how did you received or I received it, or any taxpayer, is they were basing that calculation on either the 2018 tax return or the 2019 tax return, and they looked at AGI. And so, and this was for the first one as well as the second one. So, if you filed your 2019 return and your income was maybe about, depending on your filing threshold, but it was maybe $160,000, you didn't get the full rebate. But when you get to 2020, maybe because of the pandemic, your income was not as high. You have furloughed. Just things changed in 2020, right? A lot of craziness. Well, then when you got to your return, it was maybe 100,000. Well, now that extra credit, like I said in my example, you're going to get it back. So to equalize it.
Cool. Well, that works out. All right. So this one's near and dear to my heart because my husband and I participate in a lot of nonprofits and donate money and time. But as far as donating cash, can I benefit by donating cash contributions to a nonprofit in 2020?
And yes, you can. This is I would say not the only year, but let's focus on 2020. This is the first year where you can take an above the line deduction for your cash donations to a nonprofit, but only if you don't itemize. So typically, the itemized deduction prior to the law change in 2018 was pretty, actually, a lot of people itemized prior to that. But now with the law changes, the standard deduction does kind of negates that possibility. And so the CARES Act that was signed in March on 2020 had a provision that allows married or individuals that can donate $300 of cash, can only be cash, to nonprofits, and you can take an above the line deduction. What that means is you have your income and subtractions and your adjusted gross income. It's the subtraction part of that. That's that $300 where it gets reported. That's where your AGI. So you get the benefit of $300. It's still at your tax rate, could be small, but depending on your tax rate, you will benefit this year up to 300.
Cool. That's awesome. Okay. Well, I heard on the radio that for 2020, I can actually use prior year earned income, like 2019, to calculate my 2020 earned income tax credit. Is that correct?
Yes, that is. The recent legislation allows taxpayers to kind of go back in time and look at your 2019 earned income to calculate the 2020 earned income tax credit. It's the only year right now, and it's an election. You do have to be. We've been watching every client that has earned income, the earned income tax credit, to actually go back and make that election. In fact, I just had a client a couple weeks ago where I made this election to look back at their last year's earned income because it was much higher. It was higher than 2020 because they lost income and all that because of the pandemic. Well, because of going back and using that earned income to 2019, I was able to generate them a $6,000 refundable credit. That's refundable, meaning it goes right into their pocket. It's cash into their pocket. So it is a very big opportunity for those who are eligible for the earned income tax credit to, before you file, talk to your trusted advisor and make sure that you just look at this option, this election to go back 1 year.
Wow, fantastic. So let's talk the next couple questions we have for folks that maybe either lost their job or were furloughed. First of the couple questions is, for example, let's say I found myself out of work after the pandemic shutdown, a large part of the economy, and it turned to unemployment insurance for assistance. Are my unemployment receipts taxable in 2020?
As of today, February 20, in February, it is taxable. And why I say as of today There is current rumors that there could be legislation that would make some of the receipts non-taxable. But if you're looking at filing your return today, yes, you will have to report those unemployment benefits as taxable. And you may be surprised, if you did, you received the benefit and you had no withholding. So I guess you will be surprised if you find out that you have to pay income tax on it because you didn't have any withholding to cover that.
Okay. What about, let's say I was furloughed in 2020 and had to dip into my retirement plan, either my 401k or my IRA. Is that taxable in 2020? And am I subject to the early distribution penalty because I'm under 59 and a half years old?
Okay, so to answer that, yes, there was a lot of changes to retirement plans in 2020, and some of those will impact your 2020 tax liability. Now, the CARES Act that was passed in March of 2020 allows taxpayers under the age of 59 and a half to withdraw up to $100,000 out of their retirement plans, 401k or IRA, till the end of 2020. And there is no early 10% penalty on the withdrawal. Now, you're still going to have to pay tax on that distribution, the ordinary income tax rate, but there's no penalty associated with that. In addition, I want to point out that the legislation passed in March did include a provision that you can elect to spread that $100,000 over a 3-year tax period. So that means that if you took out $100,000 because of COVID, because of the COVID pandemic, you can take 1/3 of that 100 and report it as taxable on the 2020 return, 2021 return, and 2022 return. So you can spread that out.
Perfect.
It's a very nice election.
Yeah. All right, let's take a question from a business owner. Let's say I have a business and I applied and received forgiveness of the Paycheck Protection Program. Can I deduct those expenses? Can I deduct those expenses if I receive forgiveness?
Yes, the legislation passed 2 months ago made those expenses deductible. Prior to that, just a little history, the legislation in March, the IRS came out with some notices and some really guidance that says those expenses were not deductible. In order for those to be deductible, Congress had to intervene, and they did, which was on the December legislation bill. So now that you have forgiveness, yes, all those expenses will be for deductible at the federal level. I say federal level because there's also a state level you have to factor in. So go to your trusted advisor and find out if the state will allow those expenses. I can give you some update on that. Wisconsin did pass a recent amendment to their statute that allows PPP expenses to be deductible. Really, they conform to the federal legislation.
All right. So let's take the perspective from a self-employed taxpayer. So I'm a self-employed taxpayer and file Schedule C in 2020. Are there any benefits available to me in 2020?
Yeah, yes, there is. Benefits for everyone, seems like this year. So
Hmm.
one of the new
Yeah.
benefits this year is the sick and family leave credit for self-employed taxpayers. Now, if you were an individual who has your own business, let's say a Schedule C filer, could be a Schedule F, a farmer. If you had to, maybe you were sick and you had to be quarantined. But what about if you were advised to be self-quarantined? You didn't show the symptoms, but you were advised to. Or what if you were caring for a child that because of their school or their childcare was closed due to the COVID? Or what about maybe a spouse? There are situations where if you have income on the business, and this is where I was unable to work because I had to take care of my family. And so there's a credit available that will, a refundable credit that will, the government is allowing taxpayers who file Schedule C to benefit this year. So look at that. If you're a Schedule C filer, and you had these situations, talk to your trusted advisor, find out, hey, can I get this credit? Because maybe I was out for 2 weeks, maybe 10 days, 10 business working days. it's something that to think about. Don't leave
Wow,
money on the table.
yeah, you're right. It does seem like this year there are a lot of benefits for a
Yeah.
lot of people.
And then, to add on, what other benefits are available? Well, of course, there's the accelerated depreciation on what we call Section 179 or bonus. There's also the home office deduction. Just a reminder that, you know, if you're, I think a lot of people this year had to work from home. They weren't going to work, especially if you're a self-employed taxpayer. If you had that home office, make sure you factor that deduction, that home office deduction on your Schedule C, maybe your Schedule F, because those expenses will reduce your self-employment tax. Now there's some parameters and some rules regarding home office. So just because, what you hear today, I'd say go talk to your advisor and just make sure that you follow those rules and document what you can and get those deductions.
Cool. So lastly, is there any relief for folks like you? Will the tax due date of April 15th, 2021 be extended this year like it was last year to July 15th?
Well, right now, there is no extension. April 15th is the due date. So filing your returns as soon as you can is still going to be important. Now, will that change maybe in a week, 2 weeks from now? I think that's a possibility. There's another round of legislation being discussed in Congress, and I can't imagine that the IRS getting another load of stimulus checks that distribute, maybe some other changes in legislation for 2020 or maybe 2021 that it's just they got to throw their hands up. You know what? We'll just give you an extra 3 months. And just stay tuned as we continue to find out if that date will be extended. And if so, we still would like to get people in and file as soon as possible. Don't wait until, like which I had last year, until July 14th, right after the 4th, because I like to take some time off too, especially on the 4th.
Well, we can't thank you enough, Chris, for all of this information. It sounds like, so many folks, including myself, even though I don't fit into a lot of these categories, have some things to refer to my trusted advisor, as you keep referring to, about with regard to my taxes. So thank you so much for this information, taking the time to talk with myself specifically, and then as we share it with folks that want to listen to our audio series. Any closing comments you want to make before we end the conversation?
Closing comments, I would say just to talk to your trusted advisor. Just get that appointment. If you have some of these situations where you're self-employed and you have that sick and family leave, it's something you got to talk about. Or the earned income tax credit. Just to make sure also to remind that there's those cash donations. Don't leave those on the table. You're allowed to if you don't itemize. As well as have questions, if you have questions on those economic recovery payments. Because there are situations, say for the third round, one we haven't talked about, but next round could be some opportunities for everyone to maximize that payment. So communication is very important. I feel like this last year and likely stressed again going forward.
Great.
That's all.
Well, thank you so much for your time, and I hope you have a great day.
Hey, you too. Thank you.
Thanks.